In yesterday's class, we answered this full-fledged question on risks of material misstatement from the first question. Now, we will be doing the factory impairment, design the principal audit procedures to be used in the audit of impairment of the factory and development costs capitalized in the risk in respect of new packaging. So we're going to now talk about the audit procedures. Again, in writing your audit procedures, there's a specific tool or technique that we did, and I'm going to cover that for you now before we generate the audit procedures. If you look at the audit procedure approach, that has three components. Any audit procedure, whenever you're writing an audit procedure, it has to have an A, a B, and a C. Now, what is A? A is you inspect a record, an asset, or you observe, or you perform an inquiry, or you send out an external confirmation to a third party, you perform analytical procedures, you reperform, or you recalculate something. Now, you do that with the help of a document, a person, a process, and most importantly, C is the most important component. That is, what is the auditor looking for? Is the auditor trying to verify some assertion, some IFRS requirements, or ISA? So this is your thinking aid. C is your thinking aid, and that has to be there in your answer. Now, as far as factory impairment is concerned, if you recall, we looked at factory impairment at the factory damage, and now in testing, impairment review was performed. So you would look at, you would want to first verify the carrying amount, right? So C is what is the auditor looking for. So you need to verify or determine the accuracy of the carrying amount of damaged factory or flood affected factory, right? So what are you going to, how are you going to verify that? This is what the auditor is looking for. Now, how is the auditor going to verify that? For that, the auditor would have to inspect the carrying amount, inspect the fixed assets, or you could say the non-current assets register. And why are you inspecting that? To verify, to determine the accuracy of the carrying amount of damaged factory. Then, if you look at the management accounts, you were told carrying amount, then there was some fair valuation and value in use. So if fair value is there, if you're told that there's a fair value determination or fair value exercise has been done, what you could simply do is you could inspect the valuation report to determine or reconcile the fair value of the damaged factory. Another procedure could be regarding the value in use. You could say inspect the value in use calculation performed by the management and recalculate for mathematical accuracy. If the plus minus is correct, if the multiplication is correct, you could simply do recalculation for mathematical accuracy of value in use calculation. Another thing could be inquire from management regarding the reasonableness of the assumptions underlying the value in use calculation. I mean, you could simply ask them, you could simply question them regarding the reasonableness of the assumptions underlying the value in use calculation. Then, if you look at something, there was something unreasonable in that. If you recall from my risk assessment, you would be able to recall that there was a problem. They used cash flows which should not have been included as per IS 36 because they were related to future improvements. So you could inquire from the management regarding cash flows pertaining to future improvements. That is why they have been included in value in use calculation. So, I mean, if you just look at the IFRS, that gives you ideas. That's a source of ideas generation for you. You could even talk about one procedure could be about obtaining written representation from the management. Now, if you close it over here, you're not going to get any marks. But if you say written representation from the management regarding the reasonableness of the assumptions used in the value in use calculation, you could get a mark. Another procedure could be, again, it is going to have an A, a B, and a C. Inspect draft financial statements to ensure or to determine the adequacy of the impairment disclosures as required under IAS 36. And there are a lot of disclosures regarding discount rates, regarding the sensitivity analysis, etc., that has to be there. So you could inspect that. All you need is just 5 complete procedures that are where you're supposed to have an A, a B, and a C. All these components should be present. Obviously, when you would be writing in the paper, the examiner would not want to see this A, B, and C. This is just a technique that you have to use. Then look at the capitalization of development costs. Certain development costs have been capitalized in respect of new packaging. So what would you do? You would inspect a breakdown of the costs capitalized to identify if any research expenditure has been incorrectly capitalized. That should not happen. So the breakdown, it's going to tell you if some abnormal thing appears in the breakdown, you could, check if that's a research expenditure, and because research expenditure has to be expensed out. Besides that, because certain costs have been incurred, so you could simply inspect suppliers' invoices or bank statements to determine if the costs if the R&D costs, to be precise, have been incurred or not. What else? The development expenditure, you should be able to know from your knowledge of IAS 38. If you look at IAS 38, there's a host of criteria like technical feasibility has to be there, intention to complete the asset and use or sell it has to be there, ability to use or sell the asset, availability of resources, reliable measurement of expenditure, how intangible asset generates probable future economic benefits. So this criteria has to be fulfilled before the development expenditure can be capitalized. So, I mean, with reference to its ability to generate future economic benefits, you could inspect market research reports to determine intangible assets, economic benefits generation capability. And you could determine through that way. What else? Availability of resources, technical, financial, others. So you could inspect cash flow forecasts to determine if the company would have sufficient funds available to finance the development exercise. What else? Technical feasibility. You could inquire rather with the developers, because some external firm is doing that, if there are any constraints or feasibility issues regarding the completion of the development project. So all you need to do is just look at the requirements of the IFRS and think about how you could verify them. So you could inquire with the developers, you could inspect cash flow forecasts, you could inspect market research reports, you could inspect invoices, bank statements, you could inspect breakdowns, and you could verify whether the entity has complied with the requirements of the IFRS or not. Okay, now let's look at the other requirements. I copy pasted the requirements from the partner's email into my answer space. So discuss the matters to be considered in planning to use an auditor's expert in the audit of the fruit, which are recognized as biological assets of the company. Now look at the top tip. To answer this question properly, you need to have your knowledge of ISA 620. That is why we did detailed sessions on revising our AA knowledge, because ISA 620 is a standard that's examinable at the AA level, and you need to be well versed in that standard before you can excel with this question. ISA 620, I mean, you need to talk about the competence, capabilities, objectivity of the auditor's expert over here, and the details, that is how you would evaluate the competence, capability, the objectivity. Then you have to talk about the agreement with the auditor's expert work and how you're going to evaluate the adequacy of experts' work. So these are the key areas that you need to talk about when you would be answering this particular question. So if you've memorized these principles, I mean, you would be able to score really well on this question. Else it would be a bit difficult to, score well on this question. So to be honest with you, I would call it predominantly a knowledge-based question for 6 marks. So anyone who has covered ISA 620 well, they would be able to do well on this question. Now, the last part of this question: discuss the audit implications of the email from Len Lark recommending any further action to be taken by our firm. Now, with questions like these, which are not the standard type of questions, I mean, there are certain typical exam requirements in the AAA exam. For example, questions on Rome, questions on audit risks, questions on business risks, questions on audit report implications, questions on matters to consider and the evidence that you would expect to find, questions on critical appraisal of the audit report, questions on ethical and other professional issues. There are certainly some standard typical requirements that feature on every exam, but these type of requirements, remember, they are open-ended questions. They are not the standard typical requirements. So how are you supposed to approach them? They require more planning than the typical exam requirements. And a nice thinking process would include identifying the obvious issues first, and then you could scroll in your head the relevant accounting, auditing, ethical standards that could have some relevance and other practice management issues. And then you could pull and extract the relevant issues from the accounting, auditing, or ethical standards that you find relevant. So let us first go through the exhibit so that we can more clearly pull out the relevance requirements. If you go through this requirement, I mean, I can also highlight the relevant points, but to Ben is the audit engagement partner, and Len Lark is the production manager who has sent an email to the engagement partner. Now this looks a bit fishy. Why is a production manager sending an email to audit partner? Because the two are not really connected. So you need to take care of this particular aspect when reading the scenario. The subject is, again, the subject is even more fishy: business practices. So maybe some bad business practices are going on. Let's see. Hello, Ben. I obtained your contact details from your firm's website. I hope you don't mind me approaching you directly. I'm emailing to voice some concerns over recent business practices at Margot Co. Now this alerts me there's something fishy. In my role as production manager in one of the company's factories, I inspect samples of the fruit which comes into the factory from the company's farms and speak to the farmers on a regular basis. Recently, several farmers have told me that they have been instructed to use certain chemicals to spray the fruit trees, which should increase the fruit yield. However, some of these chemicals are prohibited for use in the country because they can be toxic to humans. So which standard should come in your mind straight away? Which auditing standard, which accounting standard should come in your mind straight away? Keeping in view my top tip, which requires identifying the more obvious issues first. Okay, so I mean, if something is prohibited in a country, that's a non-compliance of law. So ISA 250, auditors' considerations in relation to compliance with laws and regulations, that should come to your mind. And if someone is breaking a law intentionally, that's a fraudulent business practice as well. So ISA 240 should also come to your mind. And if you're breaching laws and regulations, there's potentially going to be some regulatory fine and penalty imposed that could be imposed on you. So IS 37 provisions should also come to your mind. I mean, if you look at this question, these are the popular things that should strike your head. Okay, let's move further with the scenario. While talking to one of my friends who is a production manager from another factory, it transpired that he had also become suspicious that banned chemicals are being used. So potentially, this issue is not just confined to one factory, but it is happening at a number of other factories too. He raised the issue with one of the company directors who allegedly gave him $10,000 and asked him not to discuss it with anyone. It means this is being done intentionally. So I think I should be highlighting that too. It's not an isolated issue. Plus, when raised, he was given, allegedly given $10,000. My friend said that I should ask for the same sum of money, but I felt uncomfortable and thought I should tell someone from outside the company about what is going on. Please do not mention my name if you decide to investigate this matter further. Thank you, Len. So, looks like something is fishy. And now the important thing is, for these type of questions, these are like open-ended questions. So how are you going to think about them? How are you going to plan them? Like I told you, some of the obvious issues I've been able to identify, but then I would be running the other standards in my mind. I've identified ISA 250, I've identified ISA 240, so I could potentially have something from there. But now I would be running all the standards in mind. So I would be thinking about ISA 200, not really, ISA 210, engagement letter, not really relevant, ISA 220, audit quality control. So if the client is found to be non-compliant with laws and regulations, that's potentially creating doubts regarding the management's integrity. And so maybe you would consider that maybe in the future you would not continue with a client that has a poor reputation regarding integrity. So ISA 220 client continuance issues could be considered. ISA 230 is about audit documentation, not really relevant. 240, we've talked about that. 250, we've talked about that. 260, 265. 260, communications with TCWG. If there's a major breach of a law or regulation, you may consider communicating to TCWG regarding that. Then moving on to ISA 300, planning, not really relevant. 315. 315, understanding the laws and regulations, that could be a relevant standard. Plus, within 315, you understand the control framework of the entity. And as part of understanding control framework, you look at the entity's control environment. So potentially the control environment, that is the attitudes, actions, and awareness regarding having a nice control consciousness and commitment and enforcement of integrity and ethical values. I'm afraid that's lacking. So potentially you would have to revisit your risk assessment as well. 320, materiality, not really relevant. 330, audit procedures, not relevant. 400 series 402, use of external service organizations, not relevant. 450, evaluating material misstatements, not very relevant. 500, 510, 505, 520, 530, 540, 550, 560, 570, 580, not really relevant. 580 may be relevant regarding management representations. So look at the answer plan that I have. If you look at the answer plan, that's going to help you. You could talk about non-compliance with laws and regulations. You could say that primary responsibility for complying with laws and regulations rests with management with oversight from TCWG. Understanding laws and regulations and their effect on financial statements, that is the auditor's responsibility. So you could talk about that. You could bring in your knowledge of ISA 250. You could say that you would have to gather sufficient appropriate evidence to substantiate the whistleblower claims. Maybe they're false claims. So you would have to first gather evidence to substantiate the whistleblower claims. And that could include interviewing the whistleblower. That could include interviewing the farmers, including any supporting evidence, and determine the extent of non-compliance. any regulatory notices that have been issued by the regulators. You would also have to determine the extent of non-compliance, I mean, whether that is confined to one factory or more, and since when that illegal non-compliance has been happening. So you would have to gather evidence surrounding the related incidental issues. Then look at the accounting issues as 37, provisions. What could be the impact on the audit opinion if there's a material non-compliance, and that could lead to a material fine or penalty that has not been recognized or provided for in the financial statements. Could also have to consider the reporting responsibilities. I mean, if the directors are also involved, you first have to consider reporting to the management. And if you think the management themselves are involved, you would have to consider reporting to those charged with governance or the directors. But if it is found that even the directors are involved, and there are hints, for example, the directors tried to bribe one of the production managers. So if that is the case, you would have to reevaluate if this matter pertains to public interest, and so whether the duty of confidentiality is overridden, and you would also have to seek legal advice for that matter. You would also have to consider the fraud risk and control environment and the impact that it would have on the audit approach. I mean, you would have to revisit your preliminary risk assessment, as well as the implication that it could have on the nature, timing, and extent of your audit procedures. Because if you see that your control environment is not nice, then maybe you would have to engage and undertake more substantive testing as opposed to relying on the test of controls. Plus, if there are doubts regarding the integrity of the management, then reliability of verbal written representations could be dubious. There could be issues even regarding ISA 570. If this is a material non-compliance, it could even lead to license revocation. It could even lead to the company's license revocation, and the company may not be able to continue as a going concern. Or there could be doubts. It could create a material uncertainty regarding the entity's ability to continue as a going concern if this matter is taken seriously by the regulators. So those issues and the disclosures in the financial statements talk about those, and ISA 220 in terms of the client and engagement continuation decision. You may decide not to continue with this client in the future. So these are the audit implications of the email from the Lenlarg, the production manager, and the further actions that you need to take. You could even consider at this stage, if you could consider withdrawal from the engagement if permitted by the applicable legal and regulatory framework. So for these open-ended questions, you need to think broadly. There are some obvious issues, and you have to scroll the accounting and auditing standards in your head to identify the less obvious issues like ISA 240, ISA 315, ISA 580, ISA 570, and ISA 220. Now, as far as your these questions, briefing notes, the question has to take the format of a briefing note. So I would want to show you from the examiner's answer straight away how briefing notes look like, so that you could get your professional marks. If you look at it, it has to be headed briefing notes. It has to be directed to the audit engagement partner from the manager. It has to have a subject. Then it has to have headings, introduction. Now, in the introduction, it has to be brief. It just have to park the relevant requirements. I mean, these briefing notes are going to cover the significant risks of material misstatements. Then they're going to cover the audit procedures regarding two important matters. Then it's going to talk about the use of an auditor's expert in the audit of companies' biological assets, and the suspicious behavior, which indicates a breach of laws and regulations. That's what it's going to talk about, and the actions to be taken by our firm. Then you're going to split your briefing notes as per the requirements contained in the partner's email, so that he can readily find where the relevant material has been discussed as per his requirements. And then there has to be a conclusion, and the conclusion has to talk about, is supposed to summarize whatever you've discussed very briefly. So that is how you can get your professional marks. Within your question, you could make use of headings or the bulleters where possible to answer your questions. Clear? Now I'm going to take you through the examiner's comments for this question, just the key points. For professional marks, to get those marks, you have to have a suitable report style heading like briefing notes. You have to have a brief introduction that we just talked about, a structure, well presented answers, and clear explanations. That's how you can earn these professional marks. And remember, time should not be spent writing a half a page introduction or a lengthy conclusion. It just have to be very brief and most probably a copy paste from their requirements. Remember, candidates will not be penalized for poor spelling or grammar, so you don't have to go back again and again to rectify your spelling mistakes. You're not going to get any marks for correct spellings. Okay, for the question on risks of material misstatements that we did yesterday, a structured approach would include calculating materiality, stating the relevant accounting rules, describing the risk, and the resulting impact on the financial statements. If you use my 5-step approach to answering this wrong question, you will be able to score all your marks very easily. The problem is, if you're diverting and if you start answering questions from a business risk perspective, if it's a wrong question and you start answering from a business risk perspective, you're not going to get any marks for that. Basic financial reporting knowledge, if you're lacking that, that's going to trouble you in the paper. So candidates would benefit from refreshing their knowledge on reporting standards. And I've already helped you partially by providing the first batch. I've already released the first batch of my accounting standards, 1-pager notes for some 16 accounting standards. I'm going to do that for the remaining accounting standards in a week or 2 time, so that you can, work on that. One of the specific weaknesses that the examiner has talked about is regarding the company, family-owned business, and talking about the general issues rather than where that could affect financial statements. Other common problems with Rome questions are if you start discussing audit procedures in a Rome question, that's not going to get marks. If you start giving detailed definitions, that's not going to get you marks. If you lack basic knowledge of double entry, that's going to be particularly troublesome for this paper. If you do not specify the correct direction of risk, what is understated, what is overstated, if you're not going to do that, you're not going to get many marks. For principal audit procedures questions, remember, poorly explained procedures are not going to score full marks. Remember that. And these are the key points with reference to this particular question.